Okay, let's have a look at this then, this financial capital maintenance. Now, let's say you have assets of 100 and profits of 20, and your closing net assets are therefore 120. That's what normally happens, doesn't it? Now, what I want to show you though is if we try and include inflation in this financial capital maintenance, let's say the inflation on the original 100 would now make it 110. Okay, so the original 100 would now be 110. So therefore, have we really made 10 profits? Because at the year end, I've got closing net assets that are worth 120. But my opening net assets, taking into account inflation, would have been worth 110 anyway. So actually then, my profit would only be 10 for the year. Okay, so it's not a big thing in this exam, but this is the way you need to look at it. So you have to look at the opening figure, inflate that, compare it to the closing, and then the difference is the profit. It's the same with physical capital maintenance as well. So physical capital maintenance is literally, if we can, it's the capacity word. So let's say that at the moment our opening net assets are 100, and that has the capacity to make 60 items. Okay, we make a profit of 20, and so the closing is 120. That's how we normally do it. Now, let's have a look at this physical capacity maintenance. To make 60 though, now, maybe we need assets that are worth a little bit more because ours are getting a bit older. So maybe to make 60 now, we need assets worth 112, not 100. So therefore, in terms of our physical ability to make stuff, to make 60, which is what we needed to make, we actually need 112, not 100. And so our profits can only be 8. Okay, our profits therefore can only be 8 because the other 12 has gone towards ensuring that we can still make 60. Hope that makes sense.